which I will. All right. Howdy, everybody. All right. Pretty quiet. Up until the last couple hours, it's been a pretty quiet Monday morning. Not a whole lot going on. We have seen some dollar weakness start to hit the market in just the last couple of hours. There's no real news to support it. We had the euro coming down. Now it's starting to recover. So the dollar's getting a little bit weaker right in here. Same thing with the pound. Pound, you know, we had taken a couple of good short positions on the pound last week, and we kind of stayed away from it on Friday. That was kind of one of the bigger movers on Friday. Speaking of Friday, let's go ahead and chat about that just for a second as far as the trades from Friday. Didn't really get anything on the euro because we were looking for it to break into a new high. It actually broke down lower. One of the let's see here. We need to go to the yen. There we go on the yen. Yen right in here had a little bit of a breakout right up in here. If you were using PitView, when it did break up on this, it did slightly go to a +5. It didn't really close above that high. You know, I personally didn't take this, but I could see how somebody would. And then put my stop right below the low and ended up, you know, the market, we were really, I'm sorry, we put it right below the 112 level. So it wasn't a huge amount of risk, I guess. But the market, you know, we like the support level here at the 112 level. And then right down in here, we had gotten, you know, right up in here, we got a little bit of a recovery in the market. It gapped a little bit. It kind of started popping off that support level. I really liked that. And then started to break down through that high. It didn't stay up above for that long, and then came right back down as the market sold off on Friday. So, you know, that was one of the losers from Friday. So you could count that one in as a certain loser. This is one that I did take, though. This is one on the dollar Canadian, where this was hitting a long-term 78.6% retracement level. We like the fact that it was coming down off of that. It did close beneath the 3,100 level. To refresh your memory, euro dollar, we were looking for a break of that high. That didn't happen. We were looking for a close beneath the 3,100 level and a -5 on the 1 hour totals. That certainly did happen right up in here. And, you know, it started to break down quite considerably right down in here. It's a little odd because when I was watching it on Friday, it shows not going to -5. That's an odd one. Where's the close? 31. Just close right down in here. Huh. I may have mistraded that because I did take a short, because right here it closed beneath the 3,100 level. Put my stop right up above the swing high and ended up making money on that one. So it wasn't a bad Friday. All in all, it would have actually turned out to be more of a break-even Friday for us if you took both those trades. The euro dollar didn't execute for us. Switching our focus kind of where, you know, the markets are right now. Like I said, it's kind of a quiet morning in the markets. Global markets are kind of mixed. Asia, for the most part, was down except for Shanghai. Shanghai was up a little bit. Europe's up a little bit. U.S. futures were up a little bit. They're kind of mixed now. U.S. futures are mixed. So coming down a little bit. I can kind of take you through it a little bit. You can see there's Europe up about 0.5%. Dow futures, you know, like I said, they were up considerably. Now they're mixed. Oil's up a little bit. And then the Asian markets mixed. We had Nikkei down, Hang Seng down. Shanghai stocks were up just a tiny amount. So, I mean, not a huge amount of volatility in the global markets here this morning. And then we're starting off the day with kind of a mixed dollar, if you will. You know, the dollar down versus the Swiss. It's down versus the euro. Down versus the pound. and it's kind of sidling out here versus some of these commodity currencies. You know, speaking from, just what I've seen so far in the marketplace today, that I do think there are some trade opportunities here that I think we could take advantage of. The first one I'm going to look at is going to be the dollar yen. So let me pull that one up. First off, let me kind of show you what the dollar yen's been doing since last week, or since several weeks ago. We had this considerable uptrend on the dollar yen. It broke the trend. It came down and made this nice little A, B, C correction. Although it's not necessarily a Gartley, it's not, because it's certainly not harmonic, or it came down to almost 61.8, but the B didn't retrace back enough to call it a Gartley. So you would call this more of a 78.6% retracement trade. You can see the yen sold off a bit, and it's bottoming out right down in here at these lows. It's one of the, I wanted to show you that 78.6 level first. With the markets being mixed, we could really go in any direction here this morning. So let me take these fib levels off, and we'll just take a closer look at where the yen is trading right now. In fact, let me put this up on this screen right in through here. There we go. That's where I had it. You can see it's kind of been making higher lows. It's been really consolidated here on the LP trend line, and it's starting to climb back up. It was -5, now it's going positive, and it's hitting right on this support level right in here, which is kind of protecting that 111 level there at the lower edge. That's right at the 78.6 level. Looking at this earlier, my thought process was, kind of looking at this. It's kind of a, whoops, wrong high. There we go. Looking at this previous high right over in here. In fact, I probably should go ahead and I'll make that a horizontal line, because I was just really looking at this previous high right at the 111 level. I like the fact that it's bouncing off of 78.6. If we do get any upward momentum in the market today, I think this one could be one that would hit. But again, kind of like Friday, since it's so quiet this morning, there's no real, no significant news today. Right around 12:30 a.m. tomorrow, which is early tomorrow morning, we have the Australian interest rate announcement. That's really the only key news over the next couple of days. So no key news today to speak of anyway. So we're looking at more of a technical market here. But I do like, if we can get a break of this previous high, if we can get the yen to make any upward momentum, I like where the yen's trading at this 78.6 level. And again, this would be a pretty nice little breakout trade here. When it was starting to break up right on here, it was coming down, so I kind of avoided it a bit. And then the stop, you would just put stop 1 pip below swing low, wherever that may be at this point, and then look for a limit of 1-to-1 risk reward, just to try to get our week off to a solid start. Not sure why. Maybe it's because my kids are home or whatnot, but it almost feels, with the kind of lack of volatility in the market, almost feels like a holiday today. I guess it's the first week of April, right? Actually, I'm sorry, Tom. It's the last trading day of March. This would be considered a risk-on trade or a dollar strength trade, if you will. Don't really have to change anything on that. There we go. Today's the last trading day of the quarter, last trading day of March. I crack myself up. All right. Now I want to switch gears over here. I know this is going to be another dollar strength trade, but I also want to switch gears over here to let me check something out real quick. I was looking at this swing high, which was right at it never quite broke the 100% here. Here was my idea on the pound. The pound still long-term is one of the weaker currencies when we look at it from a comparison analysis standpoint. So we've gotten this retracement up. It didn't quite break the 100% retracement level. So it has retraced back up, after having a really, the pound got pounded last week and we were able to take advantage of that. So, looking at this, we don't really need to have the fib numbers on here because, the level I'm really looking at here is after this. It's still subtly making lower highs and lower lows on the LP trend line, and it has been building a little bit right up in here. But this 4,300 level, I like the level here because, we could, I want to look for selling opportunities on the pound because every time it does seem like it's been retracing at all, we've been getting some sell opportunities on it that have been actually pretty good. I want to use a little bit more confirmation on it though, on a sell entry. Close below the 4,300 level. This is one where you don't necessarily have to look for a -5. You could just look for the 1 hour total to go negative. Since it's already gone up above +5, if it goes into negative territory, if it just goes 0 or lower into red, you could certainly look for a sell on that. But for further confirmation on it, I'm actually looking for I'm actually going to be looking for it to make a little bit more of a, let's see here, try to fit the words in here. Actually, you can still see them on top of that green. That's fine. But I like that if it does make any type of resistance there at the 4,300 level, I think we could set ourselves up for a higher risk reward trade. Meaning put our stop right up above the swing high. And then look for a limit of 1 to 1.5 risk reward. I think this is one that gives us the opportunity to get a little bit more bang for our buck from a risk reward ratio standpoint. Because the long-term trend, it's certainly getting beaten up on the long-term trend. So those were two ideas I had right from the get-go. Others that we can consider, those were two that I was just kind of liking the levels that they were at this morning. Let's see what's yen doing. The fact that they're, a little bit consolidated. I like the fact that yen made kind of a double bottom right in here at the 78.6 level. It started to break out. Since I got up, was in the trade a little bit later, or was considering it a little bit later, I went ahead and just waited a little bit on this. But you certainly have to like the levels in which it's at. Where was I going to go when the lights went out? All right. So we can kind of go around the horn here. I like that pound a little bit better as far as dollar strength goes. Looking at the euro here, you can see it's had some downward momentum, and then the last couple of hours it's kind of come back up. It's making kind of the same pattern as the pound is making. It's trying to hit it. It's really hitting its head above that 1400 level. So it's hit that 1400 level, and then it's coming right back off. Same thing as the pound, so it's no need to double dip on there on any type of dollar strength type of trades. Euro overall is looking like it's kind of consolidating in through here, which is kind of telling in my opinion. It's kind of making this, because besides this dip right in here, it's kind of making a long-term little head and shoulders right in through here. So it's showing a lot of selling pressure right up there at the 1400 level. I'm going to kind of give the euro a little bit of a break today, and I'm not going to really look for any opportunities on that. If we're going to trade in a dollar weakness, I'd almost much rather trade on one of the commodity currencies, if you will. We have the CAD that came down right in through here. Oil prices are just kind of hovering. They're not really going anywhere. And then we have the CAD right in here that made a nice move down the other day, and it hit its floor right here at the 3,000 level. I'm sorry, 3,000 level. When you look at it long term, it's still even when it was making higher highs right in through here, it was still making, like, it was kind of diverging right here on the trend line. And then long term, you can kind of see, whoops, zoom out a little bit. You kind of see, where it's been. It kind of hit its floor right down in here, came up, and you'd see how much resistance there was right there. What's going on here? Oh, yeah, there we go. So we were looking at this little resistance level as it came up and hit that 78.6, but you can see if it clears down, it came down below 3,000, came up, hit its head, came down again, came up and hit its head, finally broke through, and now it's making that little consolidation here. So is 3,000 a support level? Absolutely. When you look at it, broke through 3,000, hit its head, broke up above it, came down, retested, came up, came down, retested. So that 3,000 level is without a doubt looking like a pretty substantial support level there on dollar Canadian. And this trade worked out pretty well for us the other day, but what we would like to see, this is another one where I'm going to really look for a little bit more confirmation. The only one I'm not looking for the added confirmation on is on dollar yen, but I would like to see it close beneath that 3,000 level. I don't think there's any question when you look at it that 3,000 level is acting as a crucial support and resistance level. And this is one where you definitely want to see it go -5. The stop, I don't think it's necessary to put your stop way up above this high, which would be above 31, let's see, 1.30815. Yeah, you don't have to put your stop like 80 pips away. in this case, you know, you look at where this 350 level was, where this candle came up and saw some support or some resistance right in through here. This would be it breaking down, you know, fairly low. Depending on when it does make a break, I would just look for the swing right in here. If it comes down and re-challenges the level and comes right back up, you can use a swing high. You can use a 3-bar reversal. What I'm going to do is I'm just going to write 50 max for the stop, because we are looking for it to break down below a key level, a psychological level. So I'll put this kind of stop sign right here at 30.50, which is, you know, right near that, you know, 50 pips away from where that breakout would occur. If we do get any dollar weakness, it might affect all the currencies, including commodity currencies. With the lack of oil selling off or anything today, I mean, I'm not really looking, you know, oil's been up, it's been down, it's kind of been like the market. This could be a really good candidate for, you know, at the very least, you could probably look for more on this, and you could certainly look for a larger move when the CAD is actually one of the more volatile pairs. So you could look for a little bit bigger of a move. You could look for a 1 to 1.5 risk reward. Remember, you know, the pip value on the dollar CAD is only like 7 cents for micro lots, you know, $7 or 70 cents for mini lots and $7 for a standard lot. So it's 70% less than most of the currency pairs, like euro dollars, 10 cents. So you're not risking a huge amount when you're putting in a 50 pip stop. But I do think if it breaks to this level, 2,900 right down in here, it shouldn't have any problems breaking down, you know, to that level. So you could conceivably look for, you know, a larger risk reward on this trade. If it does hit a 1-to-1 risk reward, if you are looking for a larger amount of profitability, make sure you move your stop to break even. Once it hits, like if you're risking 50 pips, make sure you move your stop to at least break even to take it off the table. I'll even put a little note on here for you. So that at a minimum. That goes for all the trades, by the way. I should write that out on all the trades, but sorry, I had to mute myself real quick because I let out a big old sneeze. So this would be considered so CAD. All right. Now Aussie, let me go to Aussie here real quick. Aussie was another one that was looking pretty attractive to me because of the retracement here, perhaps going long on Aussie USD. You can see it kind of made the same retracement as the yen pairs did. Made this double bottom at the 78.6 level. Just recently has broken through that 78.6 level. You know, or this double bottom that kind of formed here at the 78.6 level. Kind of sold off a little bit from the PitView indicator, but you know, it looked like it was going to make some headway. The only thing that makes me a little skittish from trading Aussie is the fact that they do have their interest rate announcement tonight. They're expecting them to keep rates unchanged at 2%. This is going to be a statement trade, so if it does, you could conceivably look at trading Aussie right now. It's not a bad play as far as dollar weakness trades go, because you look at it and it's it doesn't look, it retraced back down to 78.6, which is right at the 7,600 level. It's not, there's not a huge amount of volatility on the Aussie. Again, the only thing kind of holding me back on it is the fact that they do have their interest rate announcement at 12:30 a.m. tonight, which is technically Tuesday, tomorrow morning for you people in Australia. So, it's left me in a little bit of unease. It's one of the reasons why I was looking at dollar CAD as a better dollar short position. When I say a statement trade, it means that it's all going to depend on how either hawkish, dovish, or neutral the central bank is in their statement, which is going to come out, Mr. Stevens or whatnot. So I kind of put that one on hold, but it's, I know a lot of you like trading Aussie, it has broken out here. If you even were to look for it to break above this high that it just formed right in through here, which again, that kind of acted as a little bit of a support and resistance level here. You could conceivably look for it to, look for maybe a shorter term trade to the upside. I'm not going to put this one on the trading sheet, but it was something that I was kind of considering. The reason why I look at this as a resistance level is you see bam, 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 and then it broke through, came down and retested a bit, and then has hit this as a resistance. It's not a bad little trading scenario. The thing is that I would recommend that you would close it out before the interest rate announcement at 12:30 a.m. because you could see some volatility. The other thing is you may not see a huge amount of action either way on the Aussie. Much like the United States, things tend to consolidate a bit before major interest rate announcements on like the Aussie dollar. So that's one that you just want to kind of take with a grain of salt. And if you do like trading it, make sure that you wait for some confirmation. Like you can see that it broke up right in here on this, right when it hit 78.6 or right around when it hit 78.6, it started coming back up to a +5. If it broke through these highs and went to like a +5, if you're a PitView trader, wait for a close above that high. You could put your stop right down below this low. It would only be about a 40 pips stop. So not a whole lot of volatility on Aussie. But again, I wanted to show you that just so you can kind of see what I was, some other things I was looking at here this morning. New Zealand, much the same. It's coming down off a 78.6 level, kind of hitting its head off a little bit right down here near the lows. This one has been pointing down a little bit more than the others. But it's interesting because the yen is kind of making the same retracements here. I was, another thought process I had. I know I'm skipping around a lot, but that's just because I've kind of gotten through the 3 of the trade opportunities I wanted to check out today. But, another one that you could look at if you wanted to, if you want to play it a little bit safer, is look at something like the cross pairs, like Aussie yen cross right in through here. It seems to be doing a little bit better. You can kind of see that it's making like a head and shoulders bottom right down in here. If you want to trade Aussie, I would almost, it's going to be driven off of the yen. Market's just now open. You can kind of see there's a little bit of an inverted head and shoulders pattern right in here. It's been really just sideways right in here at this level. And it's also coming down to a longer term 78.6 level from this swing low to this swing high. It's approaching it anyway. Let's see here. Did it hit? Yeah, it did hit. I'm sorry, it did hit the 78.6 level right down in here about 8 hours ago. And during this downtrend right down in here, you can kind of see there's been a subtle little set of higher highs and higher lows. I went to the 4-hour chart to look at that. That may not be a bad, because I did like that Aussie setup. I'm a little hesitant on the 12/30 interest rate announcement. I would probably actually, since this is what we know to be a, here, let me take these fib levels off real quick. Since this is something that we know to be, a nice little cross to trade, this would probably be, if you wanted to trade Aussie and yen, this would probably be a safer little trade to place here. I mean, it is making a nice little reversal pattern right in through here. Little head and shoulders bottom, if you will, inverted head and shoulders, or twig and berries, as I sometimes like to call it. I am going to put this one on the trade. I would consider this one, but I would close it out by midnight. This would not be a bad little trade here. It would probably be more of a risk on scenario. We can get a close above that neckline. If it breaks lower right down in here, don't worry too much about it. You could look for other patterns to develop. Like if it breaks lower and comes down to this level and forms like a double bottom, you can turn that into like a double bottom formation and look for a breakthrough. Put your stop right below the low, 1 pip below the swing low. And this would not be a huge amount of risk either. This is another one where it's Aussie yen, so it could have some volatility if both Aussie and yen go up. I wasn't planning on putting so many 1 to 1.5 risk reward ratios on there, but same thing applies. If it gets to 1 to 1, make sure you erase your risk and move your stop to break even. Another rule of thumb is the Amelia method, which is once it reaches half of your take profit level, start trailing your stop up using a 3-bar reversal or a 3-candle reversal. So just keeping your stop at the low of the previous 3 candles on the chart. Usually you always want to ignore the inside bars, the ones that are inside. A little strategy named after Amelia. I'm talking about Amelia Earhart, not the student. Just kidding. I don't even know if Amelia's in here, but just kidding. One of my favorites. Although she's been playing hooky lately. Yeah, this Aussie yen is not a bad scenario. I always try to sell, it's like a salesman when you're a trader. You're trying to sell yourself on whether it's a good trade or a bad trade. And even though I'm calling this an inverted or head and shoulders bottom, whatever you want to call it, make sure you look at this one, and it's not necessarily going to be if it breaks through into another low, if it does come down to this low, just be on the lookout for this to be forming, either you can see, let's see here, is there a trend line forming here on the downside? Almost a semblance of a trend line, not quite. Look for it to form a double bottom. If it does come down and hit this low, if there's no longer a head and shoulders down there, look for it to form a double bottom. Then just use the peak high and just treat it like a normal head and shoulders pattern. That's not a bad little scenario either. Let's kind of go through here and see where everything's at. Now that we saw this on Friday, see the yen is making a huge amount of support here. It's almost formed like a triple bottom right in here. Markets right now, Dow is down 25. I think the S&P is down 3. Yes, it is down 3. So we're looking at kind of a negative opening today. NASDAQ's down 6. So we're holding here. So it looks like there's some support here, but let's wait for it to break out. At some point, I think the yen is going to be in for a large break. We saw a large break to the downside, but you got to wonder as the yen starts to appreciate. You got to wonder this about all the currency pairs, not only the yen, but the euro, the Swiss, these central banks that are heavy into monetary easing policies, with Swiss being, a negative interest rate, euro being a negative interest rate, negative deposit rate anyway, and, in the midst of, 85 billion in QE, you got to wonder how long these central banks are going to allow their currencies to appreciate, not depreciate, but appreciate versus the dollar before they start bringing their currencies down. Always remember, the currency war is a battle of crap. It's a battle of whose currency can be the crappiest. It's not a battle for strength. That's for damn sure. So that's always in the back of my head, especially on the yen with how much, it came down last week. And it's, when you look at it on the daily chart, you see how much support there is at this level, this 111 level. This was back when, the market came down here. You can actually zoom out. You see how much support there is. It's in the bottom part of its range. If you're wondering why I like that trade on the yen so much, it's because it's right down here near the bottom part of its range. It's been range bound since February, just sideways. When you're trading in a sideways market, you basically look for things. And here, let me just pull this up on a different chart just so you can see it a little bit better. When things are trading sideways like this, I'm just putting my support and resistance levels at more of the common spots of support and resistance. You can kind of see we're at the bottom part here. We're at the level where it could, it can easily pass up to the upper part of this range. It's been a 300-point range since February. Where do the probabilities lie in a sideways market? Well, at the bottom part of the range you want to buy, and at the top part of the range you want to sell. So that's where the probabilities are in a sideways market. The yen is known for doing this, by the way. I hope you don't mind me going off the cuff a little bit and just kind of explaining some other things. The yen is known for, it'll make large moves and then it will consolidate for a large period of time. I'm going to zoom out quite a bit here. Go back to 2013. Big weakness in the yen, and it consolidated for several months right in here and made this long-term like pennant formation. Made another big move up past the parity level, consolidated for quite a bit. Made several more big moves up, consolidated. Every time it makes some big moves, made a big move down here, consolidated. Big move up here, consolidated. Down, consolidated. These are smaller amounts of consolidation. And now we're starting to see the yen is one that can consolidate for a long period of time. And when it does consolidate, we generally look for opportunities to buy it at the bottom part of its range and sell it at the top part of its range. And that's where we stand right now. You can kind of see that lower part of consolidation that I drew on the daily charts. You can see we're at that common level of support right in through there. Remember, we don't try to build the better light bulb in this class. It's just simple support and resistance trading. We're just kind of the way we get to probability or better than a coin flip on our trades is we try to look for opportunities that we think are look good in the overall market and knowing what drives it. Probably our closest one here. Let's look at the pound. What's the pound doing? Pound's right here. You can see the pound's breaking down below that 4,300 level. That's pretty close right in there. I'd give it another 20 minutes, and man, you really want to see this 1 hour total go negative right in there. But you can see the pound is breaking down. We like it when the pound breaks down. We really do. So it's been good to us, knock on wood. Trading gods, I'm not getting cocky here. So that's looking good so far. Dollar yen, we already looked at that one. Aussie yen, let's see what that one's doing. You can see it's making some support there, that head and shoulders bottom. Let's see what dollar Canadian's up to real quick. Since we got all our trades on, it's kind of consolidating right there, so not much going on there, but it is going negative. See, this is what you can kind of see the 50 pip max would be right up above this swing high. And just for giggles, let's see what Mr. Euro's doing. Mr. Euro's found its resistance point at that 14 level. And the stocks aren't exactly going crazy here this morning. So pound's probably the closest to execution. I would wait for it to make a strong close. You would like it to go negative on the PitView totals before getting in. Sorry, I got a little bit of the sniffle this morning. And let's kind of here. Aussie yen, inverted head and shoulders, sell pound on break of the 4,300. I think that gives us a nice little round. It gives us a nice barrage of different trade opportunities, if you will. $1 weakness trade, $2 strength trades. The yen, when it comes down between the yen and Aussie yen, don't trade both of those. Just trade one or the other. Either you're going to go long dollar yen or go long Aussie yen. Don't do both of them. That would just kind of be doubling up on being short the yen. And if you get a big sell-off in the market today, you never know what can happen. You may get stopped out. So on both. So yeah, definitely on between Aussie yen and dollar yen. This is an alternative to dollar yen trade above. And I would close this before 12, I believe it's 12:30. Let me double check. Yes, 12:30 a.m. We got our interest rate announcement. Nothing much else coming out. Oh, I guess the FOMC meeting minutes are coming out at 2 p.m. That actually might be a big one this week. Close before 12:30 a.m. Eastern Daylight Time this evening. I like these opportunities. I'll stand by them, which is why they're being recorded. All right, I'm babbling a lot this morning. I'm in babble mode. All right, so today is 4/4/16. Let me go ahead and save our Word document. There we go. And I haven't sent them out to you yet, but I did get a couple more of those basic. I got a couple more of those basic recordings done over the weekend. We're not doing any this morning at 10:30, but we will be doing some basic recordings tomorrow morning, going into some basic technicals. I got to get a couple converted here today back over to YouTube, but hopefully you're liking the whole YouTube deal. Oh, the other thing I forgot is, Phil, you're probably going to mention it. I note to myself, I got that resource room that I created. I've got to promote all of you to presenters on that. No, on Friday I had a meeting at 10:30, so I wasn't able to do it. I actually did some on Friday afternoon, but none of you were in there, and then I did one over the weekend, so I did 3. I re-recorded that crappy trading basics from last week.